Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and this is the last leg of the show where we will start the discussion on passive funds. The AUM of passive funds in India, including ETFs and index funds tracking Nifty indices, has surpassed the 5 lakh crore mark. Now, according to the data by National Stock Exchange, over the last 5 years, passive funds have seen a remarkable 53% annualized growth, and inflow stood at a record 1.5 lakh crore mark in FY23. So, what's actually fueling this phenomenal rise in passive funds AUM, and what does it mean for investors going ahead? Let's welcome on board Ketan Shah, founder, CEO, Credence Wealth Advisors, take this discussion forward. Ketan, good evening. Welcome to the show. So what's the reason behind this kind of a performance and, in fact, investor interest and inflow that we are witnessing? Funds, active funds, if I have to talk about, due to market volatility, have not been able to, beat the market returns, and this is also the reason why we are seeing a lot of investors moving towards the passive strategy or passive funds. But then, what is the kind of buzz? Because you have a lot of clients, so what's the kind of questions they come up with, and what's the buzz there?
I think, Kavita, it's a mix of a lot of things. I think in 2018, when SEBI came out with the categorization rule, I think it changed the way the mutual fund industry, before the categorization rule used to perform or work, right? So now there are such stringent rules that each category of the mutual fund has to follow, that following those rules in itself bounds the fund manager to a larger extent. Having said that, then you came out with direct and regular, then there was active, passive, and then there is so much of awareness around the cost of when you do direct or when you do passive. I think which is why, with the help and aid of technology, a lot of investors lately don't want to get into the rut of selecting 4 or 5 schemes out of the 1,500 schemes available in the market, and probably think that directly investing in the index at a lower cost is probably the right solution. But I think there are a lot of things that you really have to look beyond. I think it's more to do with blending active and passive together versus doing passive alone. To give you an example, you look at the last year you had close to 80% of the active schemes on the large cap side which could not beat the index. But you look at this calendar year, you have 75+% of schemes already beating the index, right? So I think it is also to do with where you are in a market situation and what kind of style will play out. Whether a growth or a momentum kind of strategy will work, whether a value kind of strategy will work, and that will decide whether the index in that particular year is able to outperform active or the other way around. I think in the real world, the best kind of proposition is a mix of active and passive, and not just going only active or only passive.
Sure. I mean, yes, definitely. At a portfolio level, it's very important to understand the kind of importance or the kind of strategy you want to apt for passive and the active funds. But then I also want to understand the kind of passive funds which are performing. I mean, are they index-based funds? Are they ETFs? Or we are also talking about sector-oriented passive strategy funds?
So, Kavita, look, ideally index and ETF are largely the same, except for the fact that ETF will allow you to buy during the market hours at the market price, and the cost is slightly lower than the index. For largely the retail investors who are not very market savvy and sophisticated, I think an index fund is far superior option versus taking an ETF. So look at ETF and index as one option from a macro standpoint. And those on the large cap side are definitely performing well, right? Look, there is a very smaller universe of, let's say, 100 stocks on the large cap side, and for every stock you have more than 20-25 houses covering those stocks and writing reports. So there is not a lot of information or knowledge arbitrage on the large cap space, right? And hence, in the large cap domain, I don't see a reason why there is ever going to be a very huge alpha that probably active funds will ever be able to generate, because there are so many regulations in and around active fund investing, where, let's say, for example, if the index, there are only 4 or 5 stocks that are pulling the index up, right? That we've been seeing over the last 2-3 years, that has happened many a times. Active will never be able to beat passive, is because the SEBI does not allow you to take more than 10% exposure to one stock. So largely what we have to understand specifically in the large cap space, I think passive definitely has an upper hand over active, but that's not the case while we talk about mid cap and small cap, because coverage on the mid cap and specifically on the small cap side is very less. There is a lot of knowledge, understanding, arbitrage available there, and the space is huge and not everybody is covering all kind of stocks. So I think mid cap and small cap, you still have a very large opportunity playing active, but on the large cap space, sorry, mid cap and small, you have a large active play, but on the large cap space, you are more passive, and that shouldn't be a problem at all.
All right, so that's the advice coming in from you, Kirtan, where large cap one can really go the passive way, but then time to make money through active funds when we talk about mid cap and small cap. But then, Kirtan, it's also time to connect with our viewers and take their questions on the show. I will start with Mridul's question, and this question is via email. Mridul says that he's invested in SBI equity hybrid fund. There's a lump sum investment, SBI balance advantage. Again, I think a lump sum, SBI equity fund, that's a monthly SIP going on. Axis small cap, again a monthly SIP. ICICI Pru technology monthly SIP, and the goal is 2 crores in 15 years. And Mridul wants to know if these funds are aligned with his goal.
Mridul, I think talking about your goals first, with your current 12.5 lakh rupee of lump sum investment that you already have, and an additional of 28,000 rupees a month, will help you reach 2 crore in 15 years. So while you have 12.5 lakhs as lump sum, I think you will have to increase the monthly SIP and take it to 28,000 a month. Then with an average assumption of making a 12% CAGR, you will be able to reach 2 crore in 15 years. Talking about your portfolio, I would, from a macro perspective, think you have a lot of exposure and high concentration to SBI as an AMC. And also, if you have 15 years of investment horizon, I think you are better off, and because you are also investing through SIPs, you are better off taking equity investments rather than going through the hybrid route of equity hybrid or balance advantage. So I would suggest that you can move your SBI equity fund to Kotak Emerging, and if you can add more as per your requirement, then add an ICICI large and mid cap fund also to your portfolio.
All right, so that's the advice for Mridul. But then we move on. I will take Shravani's question, and Shravani just wants us to suggest funds that can give moderate returns. We don't have Shravani on the phone line, but then we would need more details to help her plan better. But yeah, moderate returns, and I think she's someone who wants to begin her investment journey via mutual funds. So what do you have to recommend, Kirtan?
I think, Kavita, like you rightly pointed out, we have no idea of how long does she really want to stay invested, what's the goal, which I think is the first step for us to be able to help her. But I'm assuming that, let's say, if she's a new investor and has close to at least a 4-year, 5-year view, I think she can start off with investing in balance advantage kind of category. And once she experiences markets, she's understood how volatility functions, and has a slightly higher or a longer time horizon, she can move to pure equity funds. So I think she can currently split whatever amount of money that she is intending to invest in, let's say an ICICI balance advantage fund and an Edelweiss balance advantage fund, and split that equally. Because you are a new investor, experience how the market volatility suits you and your behavior and your risk profile. And then over a period of time, once you get comfortable, move to pure equity funds.
All right. We move on. We have Mr. Azharuddin from Qatar on the line with us. Hi, good evening. How are you doing, sir?
Hello, good evening, ma'am. How are you?
I'm doing good. Thank you so much. How are you? Okay. I think we have your question with us, and yeah, so is this problem still there, or you've got this thing sorted?
No, I just asked something to expert regarding same problem.
Sure, please go on. You can ask.
Yes, actually, I already posted my queries. And now it's not solved, but it's now my.
Did you try getting in touch with BSE Star MF? Did you speak to them?
No, I'll send the mail. They'll reply me. Your
Okay.
SIP is now turned to AMC SIP, and it will be
Okay.
regulated by this one BSE Smart Star
Sure.
Mutual Fund.
Okay.
So now it's
Okay.
showing coins by Zerodha. But
All right,
I need
all
to
right.
know about that. Now, mutual funds are very complicated regarding this. Before it was easy to invest. Now it's getting very much complicated.
All right.
So
So, sure.
I need to know about that. If I can transfer the demat mutual fund to direct AMC, is there any way to do that? Because I need to
All right.
confirm that in future I don't want to get this kind of problem, because after
Sure, you don't want to lose your money. Exactly. Exactly. We get your concern, and let's get this answered by Kirtan. So, Kirtan, now his plan is a direct plan. It's been converted into a direct plan. Is that what BSE Star MF telling him?
Yes, I got the email.
Yeah. So we'll just sure. We got the
with direct growth plan.
got it. Got it, Kirtan.
So I think Kavita, irrespective of, from a broader macro standpoint, irrespective of where he is investing from, in the monthly CDSL NSDL statement that he receives, he'll have reflection of the total investments that he's done any and everywhere through whichever broker or whichever platform. That's one. But yes, for the kind of problem that he's facing, and if he wants to get rid of that, it's much easier and beneficial in his favor also to kind of go directly to the AMC's platform, AMC's website, and do the transaction. It'll be much easier than communicating and talking to multiple interplayers than directly talking to the AMC. And third also is when you get in touch with the AMC directly and the transactions are done through the AMC directly, you again will have the same reflection of the investments on the cash statement that he'll receive every month. The only thing that he'll have to remember is that if he's moving from whichever platform to directly AMC, he probably might have to sell and rebuy. There may be a tax angle, but if the investment is small and if it is less than 1 lakh rupee of capital gains and the investment has been for more than a year, there is not going to be a tax angle to that. So if the problem here largely is he doesn't want to take risk doing it on any other platform and is confused what's happening, he just might as well want to go to the AMC's website and transact with them directly.
Is there anything else you want to ask, Kirtan? Mr. Azruddin, is there anything else you want to ask, Kirtan?
Yes, yes, ma'am. Now my AMC chip is now activated. It's showing in my coin by Zerodha. Is it okay to continue? Because I am planned to wait for the 1 year after long-term capital gain coming.
That's a good strategy. Got it.
And then direct to invest in AMC. I have the plan. Because I don't want to get headache, because now mutual funds are growing and we are having every day new rules, and they will make us suffer. Mutual fund.
Got it, Mr. Azruddin.
So
got it. All right, Kirtan, over to you.
So, Mr. Azruddin, I think, like I just made a mention, your long-term capital gains up to 1 lakh is going to be tax-free. So, if this amount is higher, I would definitely suggest that you wait for a year. Take the advantage of this 1 lakh of tax-free long-term capital gains also. And also what will happen is if you get out of the scheme and if it is equity scheme before 1 year, there can also be an exit load. I don't see any problem in the current structure that you will end up losing your money. So it is wise for you to stay a little longer, not pay the exit load, and also take advantage of the tax structure. So I would suggest that you wait and do it after a year.
All right. On that note, thank you so much, Kirtan, today for being on the show and helping our viewers with their financial investment queries. Thank you so much.